here to tell you a story today because I too sometimes get intimidated by the market. I see two things happening. Market's going up, but some stocks are dropping. Market is dropping, but some of my trackers are going up. So here's the example how I too am like a retail trader today. And we all know I have a Discord platform. So we have Romeo who runs a live chat. Sometimes he analyzes the market. Love who everybody's seen me with before. So they're talking and I jump into some Facebook calls and Romeo says, you're going to be wrong. Facebook's going to drop. And then Love says, hold them. Facebook's going higher, you're going to make money. And I'm saying to myself, I could see both ways playing out in the market. And you as a retail trader, right? You enter positions sometimes and you look at your phone, you're like, I'm down 22%.
WTF, what the hell?
So here's the first thing. When you're down 22% over and over again, the next time you bid on a contract, instead of paying $1, if I'm down 22%, it'll be about 78 cents. Let me put in my bid at 78 cents. So that's tip number one. Now back to the story. So I'm in Facebook calls. Romeo says it's going down. He was correct. The calls I was in, which expired today, were on Thursday. I'm not sure when we'll drop the video. Were down like 31%. So Romeo was correct. The Facebook calls that I paid like $1.30 for ended up going down to 89 cents. And I said to myself, I should have listened to Romeo. He was correct. And then Facebook did an about face, turned around, and I ended up making 30% on those options. So Love was correct. Now, the point is, and the reason I'm here and the reason I created Discord and a 349 community is so we can help each other. I've got years of experience on Wall Street. I've traded some mega sized accounts. But the point is, I too, like you some days, go, oh, I might have entered the wrong position. What do I do? Man, if I sell now, it's going down. I'm going to take a 40% loss because that's probably what I would have taken. As it was dropping, and I believe my position was down 30%, if not like 34%, I would have had to sell at the bid. So I would have got out at minus 40%. So me in transparency, yeah, I mean, half of me, the devil on my shoulder was like,
yeah, sell it. Sell it all. Sell it.
The angel on my other shoulder, who happened to have been Love, said,
no, you're going to be correct. You were just early.
And then I heard her voice.
You're always early. And every time you come up with a strategy, you're early and you buy too many options.
So one of my rules is test the waters, but buy one contract. So not only nibble, ask for that 20% off if that's what you think you can get, but buy one contract. And when it drops 5%, buy 5 more contracts. That's what I do. So I'm not saying I'm right in every position. So I generally enter too early and then I sell too quickly. Today, when Facebook spiked and I got out, because again, my entry was bad. It went down 31% or 34% after I entered. So when I made 31%, I jumped out. However, Facebook spiked even higher before it eventually sold off again. But the point was, if I had better entry, I would have claimed more profit. All right, so I'm 11 for my 11 last trades. I teach you guys strategy. So let's go over one more important factor. I mean, you guys are going to watch this either on Friday, Saturday, or Sunday, so it's over the weekend. Timing of the market. I haven't spoken about this for a while. Here's the different times of the market so you know when you can buy or sell your contracts. The market opens at 9:30. I stay away. The spread between the bid and the ask is so wide. So even if you're correct, you're sometimes wrong and you're sometimes down 5, 10, 15, 20%. So those of you who like to buy contracts at the open and you're generally down after a couple of minutes, now you know why. The bids on the spreads between the bid and the ask, they're pretty wide. Number 2, test the water. I mentioned this earlier. Instead of buying 5 contracts or 10 or even 100 in my case, I'll buy 1. I'll wait till I'm down 12% and I'll say, okay, Matt, you almost bought 50 to start. You only bought 1. Position's down 12.34%. I'm going to buy 49 more and get more heavily invested. Understand that you're creating a sale for yourself. When you get a contract, you must have an option strategy as far as when to exit. Let's go back to the timetable. When things are bad in the market, or even good for that matter, at 10:15, there usually is a little bit of a reversal and then it'll follow along. So today, let's say the market was pretty crappy in the morning. It was selling off probably around 10:15. It looked like it was going to recover. And then what happened? It probably sold off worse. 10:50 to about 11:15. Generally, things, if they're bad, they get their worst around that time. And if they're good, they will spike the most around that time. Understand, 11:15, there's generally a reversal. So if you think the market's going strong, understand you'll have an opportunity to get back in. Or if the market's throwing up on itself and you're like, I knew it would, I was going to buy SPY puts, you'll have a chance. Around 10:15 a.m., it'll tend to reverse. Then 10:50 a.m. to about 11:15, as I mentioned, it tends to get its worst, but 11:15, you might get that reversal. Now, the rest of the day, that's on you guys. I focus on the morning because that's when the market's most active. Most of the trading takes place between 9:30 and 10:30, which is why you guys see the most volatility. If you like this, stay for the next video. I've got a lot to share.